We're talking option strategies with John Carter. John, I guess in this kind of market, a lot of people, when they're looking to hedge or take advantage, leverage some of the upside and protect against the downside, start thinking about options. So what option strategies should they look at?
Yeah, options can get very complicated very quickly, and I do talk to a lot of people where they just think that options get over their head very quickly, and it doesn't need to be that way. And I think that is just because the very nature of options, you can do like these three-legged, quick clipped wing butterflies and different things like that.
Right.
And here's the thing: just because you can do that doesn't mean you should. Okay. And I really think the easiest way to use options is simply look at it as a cheaper way to own the stock. Okay, and that's the most important thing. That's the first one. So Apple at $500 a share is kind of hard. That's kind of like, gosh, buying 1,000 shares, you got to lay out $500,000. Well, you could buy 10 slightly in the money contracts, and that's a whole different ballgame. You can actually then participate in the price movement. So I think that's the first thing you want to look at. You want to do analysis on the underlying stock, all right? And if that analysis is bullish, great. Buy some in-the-money calls, like Delta 70 or above. If it's bearish, you can do the opposite. And really beyond that, things are actually very simple from that too. Beyond that, the only other thing that I'd like to do is sell premium. Okay, and what that means is you take those options that are out of the money, a couple of strikes out of the money, and you look to sell them. So a lot of times what I'll do is I'll just buy like an in-the-money call for like directional purposes, and if it starts moving towards my target, I can actually start selling some out-of-the-money calls against it, and then those actually start losing premium. So it's almost like it's kind of like a poor man's covered call. But I think just think of it as a cheaper way to own the stock. Okay, that's your first and foremost priority with the options market, and then from there is an opportunity to sell some premium. You can take advantage of that. I certainly like to do that as well, but you don't have to sit there and spend your whole day trying to get delta neutral and have all these different positions on for different contingencies, or you get into a play and it goes against you. So then instead of just taking it off and taking a stop, a lot of people will then put on like 3 new option strategies to help balance it out. And again, that's just making things too complicated. To make money in options, you got to keep it simple.
Yeah, and I think that is probably a universal recommendation for a lot of strategies, especially in trading. It seems that people see the world of opportunity out there and how many different things they can look at, and instead of just narrowing down on what they need to do on this specific trade, they put everything in, like you said, instead of just watching one option position, and if it starts to not go against them, trying to save that position instead of just moving into another position. And those are very effective words of advice, I think.
Well, trading is like, effective trading is like an effective marriage. You got to keep things simple. Don't look at a bunch of other things. You just you focus on what you know best and go from there.
I think that's the wisest advice I've heard so far. Thank you.
Thanks for having me.
And thank you for watching the MoneyShow.com video network.